No, I'm not really worried about NIO, but I am worried about a couple of questions that I'm receiving, and to be honest, this video wasn't planned. I have actually other topics lined up here. However, I'm receiving so many questions recently, and a couple of you in our investors community and NIO gang here are obviously concerned about, well, the latest market trends and also what's happening with NIO stock. And I want to pick one particular question that I have received lots of comments that have to do once again with dilution. And yeah, what really worries me the most is actually not the fact that dilution may appear again on the horizon for NIO here, but rather the questions and the mindset of those viewers and the questions that they're asking here. So if you have followed my channel, you know that I'm trying to identify 10x investment opportunities, and oftentimes this is not successful. It is obviously hard to identify such companies and actually have also the odds on your side that these companies are actually succeeding. And the hardest thing is actually if you found one of those compounders to stay and stick with those investments and ride them till the very end. So let's jump into one of those questions, and it has obviously to do with the convertible bonds that NIO has issued in the past. And to make a quick spoiler here, I think those questions are actually fear, uncertainty, and doubt, and are kind of distracting from the real issues that we should be talking about. Instead, this kind of fear is often generated and spread into the public media, and then creates fear among investors and shakes out weak hands and thereby enriches a couple of people betting short on the stock and, well, basically making a couple of bucks on those investors that are losing it out. And yes, I do acknowledge that there is an issue with those convertibles because NIO has obviously done those convertibles in times when they were really struggling, almost bankrupt, and so the conditions are not favorable. And in general, well, those bondholders can actually convert the shares into stock and thereby diluting existing shareholders. So yes, there is an issue. I am aware of that. I have known it since the past already, and frankly, I don't think it is news, to be honest. The biggest issue here, in contrast to the other dilution news that we had, is that here in this case there is nothing in exchange that NIO or the shareholders are getting at the first sight. However, it is quite normal for startups and growth companies to actually use the convertible bonds as a method of financing. So as you see here in my Excel file, I picked a couple of convertible bonds that have been issued by NIO. So one is from Libin, actually the CEO and founder, bond size 100 million. Then another one is from Tencent, also 100 million. And then one with 235 million from Asian private investors. We don't really know who they are. And then actually there is even more convertible bonds, which are at a later stage, long-term bonds expiring 2024, and these are actually 650 million. So these are some of the convertible bonds that NIO has been offering so far, each of them at different convert prices. So the prices at which they can actually convert to shares in order to take shares instead of a repayment of the bond volume here. So for those short-term convertibles, we see that they can be converted at a price as low as $3 a share. Actually, they are coming in different tranches. So I took the average here. This could be not 100% correct at this stage, but it doesn't matter too much. In the end, what it means is that there could be an additional 130 million roundabout new shares that need to be offered if those bondholders actually choose to get shares instead of being paid back the bond here. And this could result of an additional dilution of roughly 11.5% in total. So the Libin and the Tencent note, 2.8% dilution each, and then the Asia private investors, they would dilute NIO by 5.8%. And then on top of that, another 68 million shares that can be converted, resulting in additional 5.3% dilution. Now that doesn't sound good for new investors because the money that those bond holders are actually already gave into the company is already in the company. So this is not, great news that you can now celebrate that NIO is getting new cash. Instead, the cash is already in the company. But to be clear, whether or not this possible dilution, if it actually occurs that the convertibles are getting converted, then it is unclear whether or not this would actually have effect of the stock price or not. And the first reason for that is that the bank analysts and also those who are doing the ratings for the NIO stock are actually analysts that are fully considering the kind of finance and debt structure that NIO has as a company. So whenever they give a new price target, and recently those kind of price targets have become more positive, obviously, they should actually be able to already think about this possible dilution and also the kind of the finance structure the company is having, and also implying and reflected in their price target. Second of all, if you go back to those dates when those convertibles have been issued, usually the stock already took a big hit on that day, reflecting that existing shareholders are, selling their shares because they're not amused about the dilution. This is actually similar to what we've seen with the recent offerings. Usually you will see that the stock is tanking by the amount of the dilution to be expected, and then usually in the case of NIO, actually it has always recovered quite quickly the few days afterwards. So I'm not saying here that this dilution is already fully accounted for by the day that it tanked, but to spin it the other way around, we cannot say that this is news or a new risk, because this has been actually announced at the date that it has happened with SEC filings, and all of the analysts and institutional as well as retail investors knew about it at that point in time. Meaning that NIO shares by that point in time should have already reflected this potential risk for the future. And then last but not least, and this is maybe one of my most important reasons here, is that the stock market is usually not really acting in a way you would possibly think about it. For instance, with NIO, we have lots of positive news lining up for Q3 and Q4, but don't be disappointed if the stock doesn't react positively to that, because maybe some of this news has already been anticipated by investors and is already reflected in the share price. So instead, if the news doesn't come as positive as expected, that may actually tank the stock price. But what I'm trying to say here is that some of the investors are expecting on positive earnings, on positive deliveries, that the stock actually may go higher based on that, but that is not necessarily the case. Remember when Miriam and I already popped a bottle of champagne on the Q2 earnings because they have been fundamentally great. However, the stock really didn't appreciate that and actually tanked, and it took a couple of weeks and more analyst ratings upgrades until actually we see the foundations and the results of these influential Q2 results to be reflected in the stock price. So what I'm trying to say here is that if you think you are trading upon news here, this is actually not true, and you may actually be really blinded and navigating in a black box here, and I don't think this is a great way of investing. And those convertible bonds and the related risk and fear news here is a great example of that, because it's almost impossible to predict whether or not this will have positive or negative implications on the stock price. Take a look at the short-term bonds here, two of them being held by the CEO of NIO, Li Bin, and another one by Tencent. So two of the biggest stakeholders and shareholders of the company here. Do you think they want to dilute all of the shareholders in the company, knowing that this will actually result in a big crash of the share price and thereby also making their shares in NIO less valuable? I don't think so. On the contrary, do I think they would like to actually convert the bond into shares in order to have a bigger stake in the company? Yes, absolutely. But at the same time, this is actually a great incentive to act in the best interest of the shareholders and the company, because that way they want to have the value of the company increase. But okay, let's stick with some worst case scenarios and all of the shares are being converted and we have lots of dilution. Does it really matter in the big picture, as I am investing here 5 to 10 years in this company? Now, what would it mean, for instance, for NIO? Well, if they can pull off their plans of growing as I am expecting it in my napkin business cases, then, well, today they are a 20 billion company and they could easily become worth a 60 billion company in the foreseeable future. So that is 200% increase over this period. And now think about it, if they really manage to grow this cake by 200%, does it really matter that you can now eat 10 or 15% less of that cake that actually grew enormously 200% here? I think this is just the wrong question, and I would say time in the market really beats timing the markets. In my previous videos, I have comments of people who have been selling thousands of shares because they were expecting that NIO share price would drop in the future and they would buy back in at $7 a share or somewhat like that, taking some profits at $13 a share. In the end, the share price never came back down to $8 a share, and those people were owning thousands of shares, so they were possibly missing out on having really substantial increases of their net worth over time just for making a short-term transaction here. So you see where I'm going? I do think talking too much about this dilution isn't really leading anywhere because it's just too short-term thinking. And as long as my views on this long-term investment are staying intact, the investment hypothesis and also the real fundamentals with NIO, those kind of short-term things really doesn't matter too much. And don't get me wrong, dilution is a problem, especially if the company is not growing. And of course, as an investor, I wouldn't love to be diluted. I would like to hold every bit of my investment in this company. However, this is just not how it works with startups and NIO in this case. And with this example, I just picked one of those topics and comments because whenever I open, for instance, Facebook page of NIO investors, I see lots of comments about, well, today NIO is down 4%. Why is it down? I can't see the news. And I think this is really short-sighted and is not reflecting my personal perspective of why and how I'm investing in this company. And once again, I think it's distracting from the real things that we should be covering, whether or not NIO customers are enjoying the product, whether or not the product is competitive, whether or not NIO is actually working and innovating and spending the capital, aligning the capital in the right way. As long as those things are going the right way and as long as NIO is growing successfully in this regard, I don't see the issue of dilution as one of the big risks that actually should have an impact on my investment decision here. But as always, these are my views. This is how I'm trading it. I'm just trying to report about this because this is my personal investment journey here, and this is how I'm actually looking to invest in those companies. Another example is the recent correction, which I have anticipated, and I could have actually, just sell all of my shares and say, well, I'm going to buy back them later because I see that the markets are going to drop, which in fact it happened. However, I'm not doing that. I would rather try and get some cash ready and in order to buy some more of those dips and to accumulate, because in the end, once again, it matters how much time you are in the markets, with how much of the capital you're in the markets, and whether or not the company will successfully continue on its growth trajectories. So sorry, stonks cannot just go up every day and every month. We have some substantial risks with the business model of NIO. NIO is a startup. It is still not being 100% sure that they can actually succeed with building their vision here, but this is what I'm covering on the channel, and I'm not covering any day trades or these short-term spikes and manageable risks like a short-term dilution of what I think is a quite insignificant amount if we are looking at this bigger picture. So I hope this gives you some clarity about my personal mindset and how I am investing. You need to judge for yourself if this is aligning with how you actually want to also think about the investment, or whether or not you just want to make a short-term trade here and maybe take some profits, and that is also legit. Do it if you want to do that, but as I pointed out here, I do think most of the investors who are actually doing that will be missing out in the long term, but well, that's just my personal thoughts. I could be wrong on that. Anyways, happy to share my thoughts on that, and thanks again for the comments. And also, I'm always happy to be in exchange with the community, and I hope you find this valuable. So if so, please smash the like button, follow us, and support us on Patreon if you want to. Thank you guys for watching, and see you this week with more fundamental videos about NIO and other stocks.